My name is Mike Polzl, and Cushman Wakefield is a global firm. We have 20 offices in Canada. We have coverage in most primary and secondary markets. So we're active in this market, and we're one of the leading firms. So I'm pleased to be here. I'm pleased to be a member of the GVCA as in the Allied Services Group. And we're also pleased to be here to learn about some of the procurement forecasts we're going to hear from some of the institutional and public stakeholders. So Martha, Wes, and Tony, it's a pleasure being here today with you as well, and also all of your hard work representing us in the marketplace and putting our community in the GVCA on the map and supporting us. So I'll try to keep this as quick as I can. We have some dry stats, so bear with us. Obviously, any questions you may have, come and ask us afterwards. We'll be here. We've got a table set up, including any thoughts on opportunities as well. Waterloo Region has grown in the last quarter in terms of the unemployment rate going down. And that means we have a rise from 277,000 jobs to 281,000 jobs within Waterloo Region. That means that the unemployment rate has gone from about 6.4% down to 5.7%. Guelph is at 5% unemployment. That's holding steady. That is the lowest in the country at this stage. So that's impressive. It also has the lowest vacancy rates, both in industrial and in office space as well, from coast to coast, shy of 5%. Kitchener Industrial, which has a 10.1% vacancy rate, that is due to older industrial buildings, low ceilings. Some tech companies are at this point looking to convert some of these buildings. That's where we see some opportunities come through, especially for the membership. A lot of these buildings, in many cases, are prime office renovations or flex space where you're going to get either straight office users, tech office users, or actual robotics and physical tech companies building things. Office space in urban Kitchener is at 13.8%. The interesting part there is that there's legacy space that is very high in vacancy. They're the most expensive buildings in the market. Dundee REIT, or Dream REIT, has recently put them up for sale. That has pulled the vacancy rate up and skews the numbers, because the old downtown, as we like to say, south of Water Street, is where you have some of these legacy buildings and other buildings that are maybe functionally obsolete. But north of Water Street, where we call it, you have the Innovation District. In the Innovation District is where we're seeing all the tech activity. We're seeing multi-residential construction happening. The future multimodal hub will be an opportunity. We'll see what happens there from the region's perspective. And we are seeing the largest tech companies looking at that area, that crosshair, King and Victoria Street, as a future place to be. Interestingly, allied services such as Deloitte and other law firms are saying we want to be in downtown Kitchener. Hence the newest deal they did behind the Tannery building, and they'll be open for business next year. Suburban office in Kitchener is interesting because we have specific nodes that are very well off. The Gateway node, just down the road here, previously is at a 0% vacancy rate, meaning that if we were looking for office space for a tenant, we just couldn't find it. That's triggered about 200,000 feet of new space coming out of the ground. The newest is a 30,000 footer at the Deer Ridge Center, just around the corner. That's where we also have our offices. And we're seeing some construction activity potentially happening on the other side of the street near the Sports World lands. The Deloitte building is currently for lease, hence Deloitte moving to downtown Kitchener. So it'll be interesting to see what happens there with that landlord and that vacancy. Industrial in Waterloo is 5.9% vacancy. A lot of that is smaller space or functionally obsolete space. It's very difficult to find space right now for quality industrial occupiers that are looking for specific requirements. It's also the smallest industrial market we have in the region. Tech firms and smaller independent users have been most of the occupiers of any space that comes up in that market. Downtown Waterloo, office space. It is extremely tight, 4.7%. There's a new building at 85 Willis Way that's coming out of the ground. I think something to keep an eye out for there is tenant improvement projects. There's retail that's happening, but the second and third story office space will likely be professional offices. And we're aware of multiple groups at this stage looking at that space in whole or in part. So come talk to us afterwards if you have any thoughts on that or wanted some more info. The office space in Waterloo in the suburban market is still feeling the BlackBerry effect. We're seeing vacancy of up to about 23%. That is likely going to normalize in the next year to year and a half. Spear Street Capital, which bought the buildings, has gone through extensive renovations in the Phillip and Columbia corridor. We're aware of certain tenancies, office tenants looking for that space, and we'll see what happens with transactions, but there's definitely a soft point there that I think we're all eager to see some changes happen with in the near future. So, and there's some speculative construction in Waterloo that's also affected the market in terms of office space. If it's priced right, it's going to be something that'll stabilize. It's a wait and see at this point. Cambridge is a very tight industrial market, 6.6% vacancy. I think most of the industrial growth we're going to see is going to be in the industrial market in Cambridge. Specifically, the effect of being on the 401 corridor. I've said before to other groups and to our clients that the GTA likely won't see that much growth north or east. It's likely coming our way. If we looked at an aerial map right now, what's truly separating us, Milton and Mississauga, is a green belt. And then we have Guelph, and then we have us. And so we are seeing large industrial occupiers that typically would be in Mississauga, typically would be in Toronto, or somewhere else in the 401 for logistics reasons. They're now looking at our market. And that is for different motivations, but interestingly enough, it's also relating to the 401 corridor and the access to the U.S. markets. We're seemingly in the next sweet spot in terms of growth there. It's going to take years. It's not going to happen next year, but keep an eye out for a lot of the clients you have potentially migrating our way. The industrial market in Guelph is at a 2% vacancy. That's extremely low. So new construction that Cooper Construction is doing on the south side of town, that's likely where most of the new growth is going to go. We think that absorption of old space will likely then drive lease rates up as the last remaining space available will be new product on the market. Our view of opportunities for next year, the next 2 years, LRT line corridors. We're going to see some activity that we've already seen kick off come to fruition. The King Street corridor, our view is anything along that where the LRT line is going to see some intensification, especially between the Innovation District and Uptown Waterloo. It is our belief that that immediate area down where the Innovation District is going to see future intensification in the form of new projects coming out of the ground. Brick and beam is becoming ever increasingly more limited. So I think we're going to see some new projects, whether they're design builds or otherwise, come out of the ground in that area along that corridor. Kitchener Frame Lands. It'd be interesting to see what happens at the former Kitchener Frame Lands, the former Bud site, large acreage down in the Huron Park area. There's limited opportunities in terms of new growth. Last figure we have is that we can't even find a space for a 60,000 square foot requirement down there. So it'll be interesting to see what happens with that group and what they plan to do within the future. But we see that as sort of the next frontier on the southwest side of Kitchener. We think that the Cambridge industrial lands, as I said earlier, are going to be an interesting place. The IP Park, which is on the east side of the highway, is just in North Cambridge, is going to be a new frontier. We think that the Boxwood lands are going to see continued new construction activity that'll bring high quality occupiers that can pay the rates and also pay for those new build construction costs. So that'll be interesting to watch as well. Obviously, the recent announcement of the Gaslight project in downtown Cambridge, that's going to be an interesting transformational project that's going to take basically an existing rental property and convert that into a higher and better use situation, which Cambridge in that area needs. So that'll be very interesting to watch as we move forward. As mentioned earlier, a lot of the tech activity is also spurring fintech services and companies that are in Toronto, such as banks and so on, looking at potentially putting more and more data-related resources to this market. There's nothing out there right now that's been pinpointed, but we are hearing and seeing rumblings of certain companies wanting to put more of a data center footprint into this area, as we've seen happen in Stratford. Stratford has been the beneficiary of data center activity, and that is quite interesting for the construction business. I think we're going to see some tenant improvement construction projects, some real interesting things happen next year. We're aware of many groups, including larger groups, that'll be in the market for new space. So a lot of this is going to be Class A office space, and these firms are well capitalized. Our vision is that the future of the industrial market remains strong and bullish, especially where we are in proximity to the GTA. We are the 6th largest industrial market in Canada, and we are, the GTA is the 3rd largest industrial market in North America. So we're going to see continued growth in terms of what's happening on the industrial front. Much of the vacancy is older, tired product. We'll see conversions and different uses come into play as time moves forward. And the rates will climb as more and more greenfield projects are needed to kick things off. Office vacancy we expect to rise for the short term, especially in the suburban Waterloo market. We'll see vacancy go down in downtown Waterloo. Innovation District is going to continue to remain tight. We'll see vacancy go down in downtown Kitchener in the more traditional office product. Cambridge is the smallest office market, so we will likely see not a whole lot of change there. It's about 1/10 the size of the other two markets combined, or even less. So we won't see much action there in terms of change. There are suburban markets, sub-markets that are extremely well off, and referenced earlier the Gateway Node and downtown Waterloo, the Innovation District. There are certain areas which seemingly from the outside looking in may be looking a little softer, but we think it's going to be positive for next year in terms of a lot of these things stabilizing and seeing some traction. And that is really about it from me. So any Q&A, if we've got time, or come and see me afterwards. We're happy to talk. We've got some of our professionals from our office here as well, so feel free to ask them any questions you may have as well.